What is the difference between an exemption, a credit, and a deduction?
Do you have 30 minutes? I mean...
I got 5 minutes.
An exemption, a credit, and a deduction. Let's put off exemption here for a moment, and let's talk about the difference between a credit.
Okay.
Yeah, let's talk about a credit and a deduction. So essentially, a deduction removes your income. Okay, so your income is taxed at a certain rate. Let's use the same, hypothetical amount that we've been using, which is a 20% effective tax rate. If I get to deduct $1,000,
correct,
it doesn't deduct it from my tax. It deducts it from my income. So it's called a deduction. It deducts from my income. So we take a hypothetical person who earns $100,000 a year, gets to deduct $1,000. Now they recognize $99,000 of income. Sure. The standard deduction for a married filing joint filer is $24,400. For a single filer, it's half of that. And so, how much you get to deduct matters a lot for income tax purposes. It reduces your overall effective tax rate, reduces your income, so the base at which you're taxed is less. So what about credits?
So credits work how you want them to work, and they go against direct tax, right? So we take our income, you take your deductions, you arrive at your taxable income, and you calculate how much tax should be paid. Generally, you compare that to how much tax did you pay, or how much came out of your paycheck. But things like child tax credit, a credit goes in between. So you should have paid $10,000 in tax, but before you count how much you have to pay, we get to take off, let's say, a child tax credit, $2,000 of the tax. So now you only have an $8,000 tax obligation. So credits are fantastic. They're very far and few between. Most commonly is even the kids in college, right? But credits are awesome in that manner for that purpose. So deductions are great. Please don't go chasing or creating deductions out of nothing. It's not worth the money itself. Keep the $1,000, pay the $200 versus find ways to pay $1,000 and save $200. I'd be bad at my job if I told you to go spend 10 to save 2. But I'm not bad at my job to tell you to have 40 kids. 40.
Holy cow!
Yeah.
So yeah, that's the number one misconception that I get towards the end of the year as far as questions from my clients is, hey Kevin, I've got some money. What should I spend it on so I have some write-offs? That's the wrong thought process surrounding deductions, right? Because if I'm deliberately paying $1,000 so that I can save $200, I am out $800. So if I didn't need to and I didn't want to, then why on earth would I spend that money? Now, if I need to spend it, fantastic. I get $200 remunerated back to me. Right. If I want to spend that $1,000, well, great. It only cost me $800, right? Because I saved the $200 in taxes. Right. If I need to, I want to, great. If I don't need it and I don't want it, don't buy it because the tax savings are not there. Right. And for what it's worth, there's only one credit that I'm aware of. I think the adoption credit under a special needs situation. But generally speaking, no credit will save you more than what you spent, right? Other than the special needs adoption credit, right? Which you can qualify for the whole $14,500 credit, even if you didn't spend $14,500.
Correct. It's not refundable anymore, but yes, you get the whole amount.
Right.
Child tax credit can give you more, but anyway, that's not how much you're going to spend on the kids.
I got 3 kiddos. You're spending more than $2,000 each on them.
So the last part of that was exemption. That one is technically an old term. It doesn't exist anymore as the easiest answer. There used to be a deduction, keyword, per person listed on your tax return. It is no longer the case. They replaced it with essentially doubling the standard deduction. And so where there used to be a smaller freebie deduction per single or married person filing a tax return, they then increased that, but conversely, they took away the additional deduction that there was per person. That's what an exemption would be. So exemption, similar to deduction, they're the same, but one is gone.
Now, for what it's worth, the Tax Cuts and Jobs Act that was passed on December 17th of 2017 is not permanent. And so it at this point is expected to expire in December of 2025. We'll see what actually ends up happening. Many of the Bush tax cuts that were passed were made permanent. So it's very possible that the Tax Cuts and Jobs Act, in some form or fashion, will remain.
Moving forward,
It
yeah.
may be that the exemption deduction never comes back. It may be that we're in an election year right now, right? So
Things change.
if the
In
if
3
the
months.
Republicans lose the White House, then the Democrats may make changes, and so we'll see what ends up happening. Okay, I think that covers our questions for today.